Hello, alright, let's do a end of the day review for today. Today is August the 1st, 2023. It's the first trading day of August. And yesterday is Monday. It's the last trading day of July. So this week we have kind of a mix between July and August. That could be a factor impact the price action. I just want to point it out right there. Okay, let's review the practice trades that we took for today. The very first trade we took is, basically we took, here's our journal, right? We took 1, 2, 3, and 4 trades practice trades today. For practice. So basically we took 4 practice trade. So our plan, our rule right now, we just from Monday to Wednesday, we take all the practice trade, and we will try to place, or we will place a real trade on Thursday or Friday when the opportunity, show up at our door. That's which when we don't have to chase the trade, so we don't have to do FOMO or over trading. So that's an idea behind this. Okay, let's look at the very first trade, right? The setup is bearish breaker and favorable gap and retest, right? Here's the setup we saw is forming on 5-minute time frames. Right here, right? We saw that right there is a bearish breaker, right? Is at the location was upswing low, and then we see favorable gap, and then it come back, retest them. So we short at this moment at 9:30. That's the 5-minute time frame. But if you look at a 1-minute time frame, it fall into 9:32 exactly. So that gives us an idea of the difference between 1-minute time frame and 5-minute time frame right there. So, and the trade turned out to be a losing trade. So we lose 26 cents. So basically we enter right here and our stop loss above here. And I believe in the video, the first trading hour, we did measure the stop loss and the target. So it's 1-to-2 risk reward ratio, and we lose 26 cents. As soon as we took the trade, we recognized that we can't violate our rule, right? Or at least we forgot to check our rule of engagement. Our rule of engagement is that when we take a short position, we have to make sure that there are buy-sell liquidity taken, so we can short them. But in this case, the opposite happened, and we failed to identify. We failed for a reason. Maybe if we fear missing out, we just want to get a trade right away, and forgot to do a very critical task that we have to check our, checklist right there. The very first thing in our checklist rule of engagement that we will go long if there are sell side liquidity taken, and we go short if their buy sell liquidity is taken. So basically we violate our rule engagement rate. That's the reason why the trade is very low, properly set up, and it turned out that's the case. The market give out the feedback right away. So that's the last trade for us right there. We got stop out, right? Because we got again our rule right there. So it's the 1 minute time frame you see right here, 32, right? We thought that it's gonna be come down because it is a we check this at a 5 minute time frame right here. Let's go back as a screenshot. 5 minutes. Yeah, at 30. That's candle. We're going with short, which is right here. Exactly 32 right here. We short them, right? Because go to the yep. Let's go back to screenshot. I try to locate. Okay, so that's our idea right there. Okay, so look at the 5 minute time frame right here. That's what happened, right? We consider this is a bearish breaker, and that's a retest, and it's near the London section, right? But we can see now, we look back, we can see that that trade is too early, right? We experience a FOMO right there. If you look carefully, you can see the first reason, like we mentioned earlier, right? If the sell side liquidity rate are taken, you don't want to get a short right away from that move, right? So that's the first. The second thing you see right here at London section is moved down, right? Very heavily, right? It go back, it retests the midpoint right there. So when it go down, it take the low of London. Surely it will rebound. It's gonna rebound. It's gonna retracement. And the best way for it to retest this one and take out of right there, and that's exactly what happened, and that's how I think we got the third trade right there. So that's the lesson we learned from the first trade, why we should not take the trade, and why it's a low probability trade right there. Alright, let's look at the second trade we check, right, in the journal for today. So we take the second trade, also short setup. Let's look at the 1 minute time frame. Alright, we short again after we see this buy side liquidity, which is in this case the first trade we violate that, and we learn from that mistake. We learn from that shortcoming. Then the second try we do better. The second practice test we do better. We did check that, and we go in here. Right, we go in here after the buy side liquidity taken, and I think it's still a FOMO, even though it make our rule engagement. However, we don't have a setup, right? Let's say you have auto block right here, you don't see any clear, any failure gap at all. So why you go in here? So that's the mistake that we make. That's the lesson that we need to learn. That's the feedback the market tells us right there. So okay, so the idea, okay, I see right here the note right here. So the idea is It's not on 1 minute time frame the setup show up, but it on the 1 hour time frame. We see the setup from a 1 hour time frame, which is a bearish breakup failure gaps short setup, and we engage when we see the buy side liquidity taken on 1 minute time frame. Okay, I give you that. Then look at 1 hour time frame right here. So the idea is right here. So this candle right here, it is a bearish breaker and it retests right there. However, we come a little bit too early, so it's still around here. Let it retest all the way here. Or other way, we have to put our stop loss up there if we want to go with 1 hour time frame. So that's our lesson learned right there. And let's look at our journal. We got stop out on that trade also, and we lost 25 cents. That's the calculate we come up with, right, which is 45. We can enter at 9:45. Let drag back to see right here, right, we enter right here. We thought that that's gonna come down. However, it come here and it take out. We put our stop loss right here, right, the previous swing high, and we got stop out. You see, as soon as we got stop out on this candle, this is a very critical candle. You see that because the way it formed right there, it had a wick both ends very long right there. Whenever you see that candle, that a marker for you right there at a signature right there, that the algo lead behind its signature. So you have to pay attention to that level when the price approaching that level. It will reaction. So we just and we could just monitor that and see how we can take advantage of that. So you see, it's beautifully, right? As soon as take the buy side liquidity, then it start go down, and that's where we took our third trade right here, and we highlight in yellow because that's the winning trade first, and we learn a lot from the last two trade, and this trade make us a successful successful trade right here. So this two trade is a loss, but actually it provides a very valuable lesson we learn, and that's the reason we win the third trade right here. So the setup is gonna be bearish breaker, family up retest. It's a short setup. So let's see how it looked like on 1 minute time frame. So yeah, beautiful. You see, we mark right there from 10 to 11. Any failure gap between that but have properly failure gap set up for you. So as soon as we see the signal tell us the failure gap, and then we go in right there. And our stop loss is just above, either above this swing high or this swing high. Yep. And then we get in what time frame we get in? And what time we get in? We get in at 10:08. So let's put right here. Targets. No, we don't want to underline. So let's do entry time 10:08, and the condition for that, the rule of engagement equal mat, right? Buy side liquidity we taken, right? Or sweep, you call that, right? Just get sweep or get rated. And then we start engage short right there. And you see it's a beautiful trade. We entry at 8 right here. Almost perfect. Perfect right here candle. But perfect in the sense that we try to short on upload candles. I think, we always have a credit right there. And you see, wow, it's so clean, down move. ICT concept, he give this run is so-called low resistance liquidity run right there. It's LR. That's what it stands for. It's a very clean down move. Right, you can say that. That's the note we check, right? Very clean down move. Or another word for that is called what? Low resistance. I say this word better than the first time I say. First time I say it's like twists my tongue. Resist. Liquidity, right? Run. So this LR. Very clean down move right there, my friend. Do we need a hyphen? What else we see? Very beautiful. And our first target is actually, well, look at the screenshot. What are our targets? So we target at 9, open at 9, which is right here. Or even better is the sell side liquidity right here. You see it take out. There's a sell side liquidity right there. Even better. So it's a clean move for us, right? It is, we hit a target right away at 10.15, right? Right, 10.15 right there. And then what else? We win 99 cents for 2 trade we lost. This trade we win, so we cover our loss and we still profit. The reward ratio for that trade is 1-4. Basically we reach 26 cents and we gain 99 cents, almost $1. So the third trade we take. And now look at the last trade, which is the fourth trade we take, is a break even. So basically we engage right here. We try to short again. Okay, we observe that after it's a long time, right? You see the marker, the vertical red line right there. That's give it the long time from 12 to 1 p.m. Right there. So we were thinking that, all right, so it's a long time, it going down right here, it's break the structure, right, and then it go back right here, and we feel like this a double top, and it's auto block. That's what we're seeing, right? Fell up, retest 1, do that 2, and we say, wow, we did that twice, that's good. So we jump right here, we feel that we're mixing out, right? So that is our mistake that we need to improve. We fear mixing out. We should not enter a short on this right? It take the sell liquidity here. You don't want to go and short that, right? That's again a rule engagement right there. And also right here, it's not really, it's still like a liquidity grab right there. It's not a market structure shape. So that's two fundamental mistakes that we make on this trade. It's just a practice trade, but we analyze and we see, you know, how we execute a trade, how we enter the trade. Yeah, so this is a very, you know, classic mistakes for the beginner, which is we are right now. And that is we don't go in and go short when the buy side sells liquidity taken right here. You see, right there. And this, I think it's not a name for this. It's called fallen, right? You have it's called rising wedge, and this is fallen wedge. So you don't want to go in short, go short right there. You get stop out, right? You get stop out, or you get, you know, break even if you move your stop loss quick. And that's what happened. Okay, let's see how the price moving. Okay, so we're going at 1332, right? 1332 right here. Oh, wait, 32 right here. Yeah, over here is so wrong. I mean, I cannot believe that I check this trade. It's just a fear missing out. Don't do that, right? If you want it, then take up here, the retest up here. Don't chase it. If you're mixing, let wait. The market will give you much better opportunity, right? Yep. If not, then wait for tomorrow. That's my mistake. That's a mistake we learned today. We learned lots of lessons. That's beautiful and wonderful. We should not, you know, too hard on ourselves right there. Give our time, give ourselves enough time to learn. We will get in better. We build a system that never fail. Why fail? Every time it fail, it's not really fail. It's just a feedback from the market gives to us, and we process that data and we improve our system. That should be the mindset we have right there. So go back here, so we can see that the mistake we have, right? So put a note right here. To break even, right? We short, we, no, let's say, come on, the entry location were not optimal. Why? Because so suddenly were just taken out. Right, so that was it, you know. Best location must be at the retest, you know, area. Okay, so basically we say that really it's not good, like The better location has to be up here. Let's put the note right here so we help us mentally. We learn this lesson. Entry location, or yeah, were not optimal, right? Because yeah, it's a better location. It should be up here. Retouch here, retouch here, retouch here. If you miss it, don't chase it. Okay. Yep. Beautiful lesson we learned. So we take a screenshot of that, put in our journal. With Pearson lesson learned first, right there. Okay, so we go in here, right, and you see it is coming down. We enter it here. We have it. Then when I took the tray, I know that there are chain because I see the buy side. There are chain that this will bow back. So as soon as I took the tray, I will move, and as soon as I'm in the money, I move the stop loss right away. And it did happen. We moved the stop loss to a 42. Let's see, when did I move the stop loss? Yeah, we moved the stop loss right there. We should move earlier, move a little bit late right there. 42, a little bit too late, but at least we get out break even. 42, yeah, right here. Right, we got in right here, and when it go here, we get out. Yep, so we'll get out. So it's a break even trade for us right there. Alright, that's the review for the 3 practice trade we took today. No, actually 4. 2 loss, 1 win, and 1 break even, and we come out profitable today. Yeah, one thing I point out that the people, I mean the market or the market maker or algo is run very smart. You can see, man, you cannot believe it. It runs so accurate. Okay, let's remove this for now. You look at that, you see, it don't look, it take out. You see, a lot of you are short, right? You see, I know that a lot of people are short, right? That's why I put like huge buy side liquidity there, right? After the market, after in the London session, but as soon as at night, you go boom, boom, take all liquidity. You go, you take out the buy side one more time. You see right here. You swing both ends, you take the liquidity right there. You see, and still a lot of people going short, right? You go boom, go and take the second time, now take the third time, fourth time, and after markets it went down. So after people get out of short, there no liquidity right there, it go down. So for a trending eye, we're not there yet, but for the trending eye, now we look back, you see the best is short right here at 15. Short them and keep them there overnight or whatever right here we can out. That's one thing I point out, something really quick. I mean the same thing for yesterday, right? Right here, first go down and then boom, last 15 minutes, go up, take the buy side liquidity, and after the market, it take all the buy side liquidity out. So no one short right here and start going down. You see right there? And it never, break away from this bearish breaker and this bearish breaker right here, the whole rate breaker right there. So that's the thing I want to emphasize, that the market, the algo run very efficient, right? Because our theory that is auction, you have a buy side and a sell side both, the buyer and the seller involved, and the algo want to make as much transaction possible because it charges the fee, build a fee to engage in the markets right there. But anyway, I think that's it for now, and talk to you later. Thank you. Bye bye.